Hello, this is Martin here from seekedge, the channel for learning about trading and investing, and welcome all of you to the brand new episode of the markets next week, the weekly technical analysis show for August 30th, Monday 2021, where we are going to analyze how the market did last week and look at how we can plan for a good trading week next week. Right? So if you're not subscribed, please subscribe and share it maximum people. Thank you so much. Let's get into the analysis, right? So market price actions, right? If you can see, the weekly has a hammer candle, and that's what happened in so hammer shows that the bulls are there, the wick size of the hammer. So it made a new all-time high, right, last week, right? It bounced from the fall. Around 1.3% of bounce happened because the previous week it had fallen, right? And then from that fall it just started trending upside. So we'll see the charts, don't worry. Now all these details, the next slides will be charts for that, but this is what happened on the weekly on the Nifty. It's a bounce, it's a hammer bounce that happened. Now 2.5% of bounce happened on the bank Nifty. It gave up around 1% of that, and then finally it said a small body weekly candle on the bank Nifty index. Now on the daily, these are all weekly candles that we're talking about. So the daily candle is showing that again it's a green, it's a hammer candle, right? On the bank Nifty, it's a small body candle. It's the same as in the weekly and the daily. The patterns shows the same, but basically the nutshell is that there was a fall and there was a recovery that happened there last week. Last week was another recovery from the downside. So this just indicates that the presence of the bulls are there, right? The Bollinger Bands are showing that more or less the same. The expansion had already happened in the Nifty, and slight expansion happened on the Bank Nifty. It continues to be there as it is there in the previous weeks. So this is what the charts, right? This is what a hammer on the top, right? The wick size shows there was a spinning top and a doji the previous 2 weeks, but this is a daily candle. So daily there is a hammer. Before that there is a doji and there is a spinning top, right? And you can see that the 5 days, previous 5 candles, if you see 1, 2, 3, 4, 5, it is an up move. It's there is a fall and there is a bounce. There is a fall and a bounce. Look at weekly hammer, small body, right? Right is Bank Nifty, left is Nifty, right? So it's an all-time high. Bollinger Bands expanding Nifty also has expanded compared to the skews area. Here you can see that the band as width is increased, but it is hanging somewhere near the moving average. Now support and the resistance levels can be seen clearly here. So 16,350 and 16,450, that is a new zone of support that the Nifty has. After that you have 16,000 to 16,150, right? That is the second level of support downside, which is 16,000 is a rounding number. Previous swing, that band is actually a previous swing low level, and also a Fibonacci retracement, and also a Fibonacci projection, right? Trend projection 23 levels, right? The support one is actually Fibonacci projection level 50. It's also a previous swing low. Now, support 3 is 15,850 and 15,950. This is old Fibonacci 23 retracement level, and it's also the previous resistance forward from where it broke out. The support 4 is 15,500 to 15,650. That level, this is a Fibonacci 38 retracement level, and is also a previous swing low level and the previous resistance zone. So this is what Nifty support levels. Now resistance and supports is 16,700, where it has made an all-time high. In fact, went to 16,722. Right, and then after that you have the 16,850 level, which is again a projection 78 level, likely to face resistance at 16,850, and after that you have resistance. It's all rounding number 70,000, the big number. Now Bank Nifty levels, if you see, the first support is seen as 35,300 and 35,450. That is a new level. This 35 seems to be a good support level, 35,000, and just above that 300-450 level there is a zone that is created as support. Now after that you have the 30 below, you have 34,900 to 34,400. That is that is also a Fibonacci 23 retracement level and the previous resistance level. Support 3 is 34,000 to 33,700. This is the Fibonacci 38 retracement level, previous swing low level and previous resistance level. Support 4 is 33,500 to 32,280, Fibonacci 50 retracement levels and a previous swing low. Now resistance supports is 35,600 to 35,900. 36,000 is a major resistance zone. Above that you have 36,500, that is a major resistance zone. Then again, this is all previous resistances. Then you have the all-time high 37,700. This is the previous resistance zone again, all-time high level, right? So these are all support and resistance. You can see them in the charts, whatever is there, right? 15,700 levels, the interim support at 15,350 for 50 levels. Then you have 16,000 to 16,150 levels. Then you have the old resistances. Similarly, Bank Nifty also, it is stuck at resistance zone of 35. Near to 36,000, that zone, and then you have 36,500, then you have 30 above that. Supports are down here as it is before. Now the momentum and the trend analysis, if you do, right, the momentum, the RSI momentum of the Nifty continues to be the bullish on all time frame, weekly, daily, monthly, right? Bank Nifty, the momentum on the daily it is sideways, right? There is yeah, so yeah, so there is some small correction here. So yeah, so Bank Nifty continues sideways momentum on daily and weekly, right? This is a weekly time frame. There is a correction here, right? So there is another most very important thing that you have to notice. There is a bearish momentum divergence that could pull the market down, that is seen on weekly as well as daily. We'll see that in the next slide on the charts. So there has to be cautiousness. The momentum is there, it is in the bullish on the Nifty, but there is a chance that the momentum is increased, bearish to momentum divergence. It's a reverse divergence, not a no, it is not a reverse. Reverse is bullish actually. Bearish momentum divergence happens when what, the price is moving up and the momentum is coming down. So there is a contradiction, right? This variance or this divergence is what that has to be kept in mind, right? So the more number of bars, only on confirmation we can, on price that is moving above only we can be sure of that, but it is not confirmed yet. But that there is a chance that this correction can happen, right? Previous week we had bullish divergence, so we were talking about that. Now we are talking about bearish divergence. Now ADX indicator is showing that trend is bullish on all time frames and with the rising strength. The ADX strength in green thing, right? We'll see in the next chart. So that is fine with Nifty. Bank Nifty, right? Actually, has crossed the bull zones. Last week it was bearish. It has crossed the bull zones on the ADX, on the trend, right? But there is no strength for that trend on the daily and the weekly. But monthly it has got strength. So the strength is rising up means the trend is likely to move further up. So that is fine with Nifty, but Bank Nifty strength is not good on the trend, but at least it is maintaining the bull zones. Now this is what you see the momentum, right? There is a bearish divergence on the daily. In Bank Nifty there is nothing. It is continuing the sideways zone. Divergence can be the price is moving up and then price is moving up, momentum is going down. So this is likely to pull that at least to this level, 16,400 levels. Trend is rising with strength. ADX is falling, but still in blue is indicating the Bank Nifty still in the bull. Now VIX we can see the VIX happen. VIX has fallen down, slightly fallen down near to 4% last week, right? Now open interest data, if you see open interest data on the Nifty and the Bank Nifty, in the futures it is showing that it is short covering. Short covering means what? People who are gone short, now they are going the other way. So that means it's slightly bullish, right? Again, so open interest on future showing some bullishness, that slightly. And the operation on the call rate on the options open interest is showing that the call rating level is at 16,700 and then it is 17,000 for the next expiry. Right now the put support is in a 16,600 and then below 16,500. So very good supports and then resistances far away to 17,000. That means it is also indicating bullishness. Put call ratio, if you see, you can understand that. You will see that right. Bank Nifty already showing 36,000 and 36,500. That is where it is seen the resistance. We talked about it's not about to break the 36,000. 36,500 is also banned on the chart when you saw it earlier. Right now, 35,000 seems to be fine. It's a good support. 35,500 also there is a mistake here. This has to be 35,500, right? That is mentioned correctly in the chart below, right? 16,000, 16,500. Resistance 16,700, 17,000. 35,000 support, 35,000 support. Resistance 36,000, 36,500. Now put call ratio 1.21 for PCR, 1.21 for Bank Nifty is good bullish. 0.95 is also near bullish. Short covering buildup we already seen. VIX fall 5%, we can see on the chart here, and settled at 13.4 levels, right? So it's low volatility levels. The HIV is historical volatility, implied volatility, you can see it's 7.8, which is lower than the 11.7 implied volatility of Nifty, which is okay, but you see the IVP at 3.1, right? IVP has to go up to above 60, 70, 80 levels only, then there is any perspective for the seller to do the option selling properly, right? VIX continue to be the lower regime. You can see that charts of the open interest data here clearly, right? This looks like a bullish chart because it supports the put rating is more. Here also put rating is more on the Bank Nifty right side. So we have seen that. Now sector watch, if you see, the IT index again moved up another 3%. Last week also, still weekly there is a bearish divergence. You have to be careful. There is a vertical move that has happened since several weeks, and this is because of dollar strength, and dollar strength is reducing now in the dollar index, and also USD INR had a dip. So this can impact and this can trigger the IT index to fall down, right? So you have to be cautiously bullish, very much cautiously bullish on taking new positions in IT and putting stop losses if you already taken. FMCG is if 4.5% breakout, they did an excellent breakout last week. And this week it formed an indecisive dragonfly kind of, but it is bullish, right? And there is on the daily there is a small diluted kind of momentum bearish divergence there. You have to be cautious, but not as much as IT, because vertical breakout does not happen. Expected by FMCG is further has scope for further up move. It is just one bar has gone up and it can further move upwards. But there is an indecisiveness that you can see on charts. So time for slightly. Metal index, the bullish reverse divergence on the metal. We had said that the metal had a bullish reverse divergence previous week. Exactly like that, it worked and then it bounced from there on the weekly candle. This is so the daily momentum is still in the sideways. From the bear zones, it has got into sideways, and now it is supposed to further move up. Once it has reached the bull zone, you can take the positions in the stocks for the metal. Now, auto bearish, stay away from it. Again, it fell 2% last week. Previous week also it had fallen. So it is heading towards the weekly M pattern where it may find some support, which is far away. Right, another 3% or more is there. So auto stay away or go for short until it reaches the neckline of the M pattern. Pharma sector had bearishness, but now there is a good news there. There is a bullish momentum divergence that is likely to play out, and then it can bring it up. Right? It had fallen down. It had corrected because of the bearish divergence previous weeks, but now it has got a bullish divergence. It is expected to move further up. If you see the charts of the index, you can understand. Now the stock picks, two picks for the next week. One is left side, you can see Tata Consultancy Services. You can see this is a weekly chart. A good excellent breakout. It moved very nicely. There is a chance that some slight retracement can come in. Once that comes in, you can enter that for a swing or positional trades, right? This is not it is a clear breakout, but it has gone almost 2 bars fully up, and good percentage move has happened. So be careful, but it is breaking out and it has momentum. You can play it, although be ready to catch the retracements and then keep the stop losses tight at this breakout zone. Right side you have SBI Life Insurance, which also is trending excellent, and it is ascending. It's a triangular breakout that has happened, and it has That neckline can be the support zone, and then this also has moved up enough, right? So the moment we find a small retracement, we can put the Fibonacci extension from the last swing from here to there, see where the support zones are there. Whenever it retraces support zone, take the trade. Now, institutional participation, we can see that 6,830 crores were sold by foreign institutions. So you see that the sea of red, it's only selling that is happening since last 2 weeks. But the good news is that DAS bought almost all of it, 6,380 crore of buying, although interim selling happened in between, but DAS are staying, are keeping the market from falling down. Now the derivatives net longs continue to be flat more or less. So that is the institutional participation. This is a worry. Fyers continue selling. When will they turn to be a buyer? Is the question in front of us. Now, global markets interesting. Yesterday there was a Fed chair announcement on the taper and interest rate, and it looks like US markets reacted green, and then weekly wise, if you see, they are all closed green, all the major indices. Now, the dollar at the taper meeting impact can be seen in our market also, most likely in the upside, right? And but I'm not 100% sure on the fundamentals behind the impact. All I can understand is that the announcement was that the money printing will not stop immediately, but 2021 only. In the next coming few months, it will slowly start. But the interest rate, there is no rush. They're not going to do that. So that was probably the reason why the US markets were worried about the money printing stopping. If money printing stops, then stock market will be affected, right? So money, so the stock market moved up means that is a decision in favor of stock market, right? So if US market is happy, then obviously our markets also will be happy. More money, FI money will come in. So likely to open positive is what I understand. But yeah. So one thing that is clear is the dollar index has weakened. Last week, 1% fall happened. It had done a false breakout on the dollar index. The dollar has weakened, unlike a breakout that was expected to have happened previous week. It did not happen. Another thing is crude oil jump shooted to 71% from 64 levels. Almost 10% of jump has happened, which is not good. And there is some relation between the crude oil, dollar, and the gold, right? Because gold, you can see that it has shooted up, right? It had a 3-week consecutive movement. Last week also it closed green with a good bullish candle, right? So it is further heading up. It has bounced from the previous support zones, and there is a resistance that can be seen up there on the right side down, right? So if that is broken, then it can actually face the next resistance top at here. So USD INR chart can be seen here, which it had fallen down. You can see this red bearish candle happened on Friday, 73.5. It was hovering around this support zone for a long time, right? For almost 2 weeks, right? It was hovering around this. It hit the channel top in between and then came down, and this was a major support. So now, yesterday, because of the Fed meeting or anticipating the meeting outcomes, it had made a big fall, bearish fall, right? So rupee has strengthened, dollar has weakened, and gold has strengthened further. Crude oil has fallen up, has bounced up to 71 levels from 64. That is, US markets does not show any indication of bearishness. They are all closed green after the Fed announcement that happened yesterday, Jackson Hole announcement, right? So now the VIX level, now markets continue to be 13.4 low levels. So calendar spreads is what you have to do when you are doing swing or position. We can gain advantage from the spikes that happen. Intraday is very tough. It is having a lot of V shapes. Sometimes two V shapes are happening. It is going up, down, then again going up, down. So this is what is happening the last. On these V-shaped moves are happening intraday as well as on weekly basis also. If you see these V-shaped movements, making it very tough for a trend following it to happen. So got to be cautious to understand the candlestick intraday patterns and then foresee a reversal and then go long till then or go short till then, right? That's how we have to play. And also positional, levels and support resistance levels that we identified has to be kept in mind clearly before you exit or further going long. But further going long has to be clearly above the resistance zones that we currently mentioned. Now, this is a actionable index play. Nifty, this is giving a reasonable profit and reasonable probability of profit, and also uh, not much of capital, and the risk reward is not that great, but it is giving a very good range. So when there is uncertainty on where it is going, which side it may fall, the range is what matters. So this is, and also if VIX shoots up, this range can further expand. Now this is a wrap. Like market made another new all-time high after a previous week fall. Right, vertical fall had happened. It recovered again. Again, it is saying that the bulls are here. No matter what we say about correction, whatever, the bulls are here to stay. Right, because it will fallen down multiple times if you see the, and then it recovered just like that. Right. So overall buyer is slightly bullish. You can say it was slightly bearish last week, but now it is slightly bullish. But there is a momentum bearish divergence which is a concern. FIS continuously keep on selling is a concern. Bank Nifty not supporting as much and also not very slow in taking over the resistance. 36,000 still remains a hurdle for Bank Nifty. These are all concerns, even though there is a slight bullishness. But Bank Nifty has not given up the trend. You can see that after the fall, it had a trending up mode that happened. It now retraced and then again getting ready for the next trending up move is what the chart patterns looks like. So the trend is not given up, and the Nifty has got very good bullish momentum, trend and all, and good support levels outside. Everything is it, but the only concern is the divergence. If that plays out, there will be a problem. So all of these, the trend and the momentum indicators in the Nifty is showing that 30,000 is can be easily taken out. When only if Bank Nifty corporates a little bit. But that is what the general feel that it gives, right? Which issues we already talked about. It's a 13 for it's a lower regime, and then V-shaped movements very troublesome. Mixed spice causing option sellers big trouble. Positional play out as we already discussed all this in the last slide. So that is a wrap up of um, of the market. So I hope this will give you a perspective on what happened in the market and also help you to plan your trades at your risk management and as per your capital and as per your uh, you know the trade plan, right? So if you like it and if this helps you, hit the like button and share it to maximum so that others also benefit from it, and it also motivates us to keep doing this every week. And it does not cost you anything, so please share to maximum. Thank you so much for watching and have a happy trading and happy learning.